Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update. Today we're going to focus on what's going on in the world economy and how that affects us here in the U.S. All of these updates are periodic updates. This one, we haven't made a video in, I think, about 2 weeks, so we're going to fire off 3 in a row here, dealing with this one, the world economy, the next one, the U.S. economy, what's going on there, and the last one, things that affect the strength or weakness of the U.S. dollar, gold, silver, what's going on in those markets. All of these things are just snippets to get the whole picture. If you've not seen the Coming Storm video we did, there's a link near this video where you can go and watch that for free. I highly recommend you do that. We've got a huge storm coming for our economy, and if you're not prepared, it's going to blow you away. So, I'd encourage you to go watch that and be prepared for that. So I'm going to start with the situation in Europe. We did a video on Greece. If you need more information there, go and watch that video. But Greece has had problems. They have not been able to underwrite their bonds. There's not been willing buyers of bonds. Interest rates have shot up, and so this is a major problem for Europe. The major countries of Europe have come together along with the IMF and structured somewhat of an agreement. It appears there's an agreement in place. The problem is that if it doesn't really fix the problems of Greece, it just kicks them down the road. Greece can't pay for their interest costs. What they have done, which is something that most Western countries, including the US, haven't done, is they have drastically reduced the amount of their spending. The problem with, even though they made drastic cuts, interest rates have popped up, and so their new cost of interest totally wipes out all the gains they made by reducing their costs. So they have massive spending problems. It's not going away. And now, because it looks like Europe is going to bail out Greece, that means bigger problems for the rest of Europe, even the strong countries. If they are now on the hook to bail out the weaker countries, that's problems for Germany and the Netherlands. Portugal, Ireland, Spain, Italy, they're all going to be lining up because they have very similar problems. And now that they've seen Greece get bailed out, they're going to want to be bailed out themselves. So we've got kind of issues there. Greece is not able to pay the interest on their debt. They're just rolling it over and refinancing it, actually exactly the same as the United States and many other Western countries are. And they're just hoping they can continue to do this. The German people are not happy about this proposed bailout, and there's lawsuits in play, so it could get turned around. Really, the best situation, really for both countries, would be for them to get out of the euro. Greece, on the negative side, if they could just get out of the euro, they could just deflate their own currency so it's worth less, and they'd be in a better position. Germany, if they would get out, they would not have to be trying to support all these other weaker countries. But no one wants to do that. There's too much pride involved with the fact that they've made this currency. So it's a big problem all around. Although there's news that the situation is solved, the reality is it hasn't been solved at all. It's been kicked down the road a little longer. And as I said, interest rates, although right when this agreement was announced, interest rates dipped back down, they've now gone right back up to the danger levels that absolutely cannot be sustained by Greece. Dylan Grice, who writes for Société Générale out of France, a big bank out of France, he said the only difference between Greece and other OECD countries is that Greece is small enough to be bailed out. So all these Western countries, including Japan, have the exact same problems. It's just we're much bigger, and when we get to the crisis place that Greece is, it's not going to be long. Who's going to bail us out? No one's big enough to bail us out. Apparently the IMF agrees. They have just raised their borrowing and lending capabilities tenfold. So that's 10 times the new borrowing and lending capabilities that they had before. Obviously they see crisis coming or they wouldn't be doing this. Of course, all that they do, their SDRs are made up of, special drawing rights are made up of other fiat currencies. So it's all a paper game that's being played here. The Bank of International Settlements out of Switzerland has they made a comment. They're very old. They've been kind of the oldest watchdog about banks and countries in a long time. And I want to read some of what they wrote. The aftermath of the financial crisis is poised to bring a simmering fiscal problem into industrial economies to the boiling point. They see an abrupt rise in government bond yields. They say bond traders are notoriously short-sighted. Assuming they can get out before the storm hits, their time horizons are days or weeks, not years or decades. We take a longer and less benign view of current developments. This is all in a study entitled The Future of Public Debt. The question is when markets will start putting pressure on governments, not if. When will investors start demanding a much higher compensation for holding increasingly large amounts of public debt? In some countries, unstable debt dynamics in which higher debt levels lead to higher interest rates, which then lead to even higher debt levels, are already clearly on the horizon. So they're seeing these problems. George Soros, interestingly, came out and said the U.S. is creating a massive new bubble. He sees this popping and huge problems for us. It's interesting because his politics always tend to lead this way, so it's ironic, but even he's coming out and saying this. Moving on to other countries, Kyrgyzstan, which is a small Central Asian republic, they just overthrew their president here recently. This is the only country in the world that has both a U.S. and a Russian air base. It's right next to Afghanistan. That's how we fly in and out to Afghanistan. And they've just overthrown their government. It looks like the coup was kind of supported and helped along by Russia. So we see unrest there in that important area of the world. China introduced a duty on U.S. and Russian steel, and ironically they said it was because abnormally low prices on the steel. So you see a little bit more of a trade war brewing. And even though last Thursday on the 15th we did not call China trade manipulator or currency manipulators as we had, of course they clearly manipulate their currency just as we in most countries do. They're more open about it, but still the trade war is heating up, which is bad for world economics. China itself has a bubble. February property prices increased at the fastest pace in 2 years. The government just announced new lending rules to curb this bubble. They don't want a massive bubble burst, so they're trying to curb it themselves. What happened yesterday was the stock market had a huge drop, a 5% drop almost, and it dropped below its 50 and 200-day moving averages. This could be the catalyst that brings about a stock market crash. They're basically the engine of the world. Whether this is it or not, their economy can't keep heating up. Everything is at bubble levels. It's got to cool down. When it does, since they're the engine of the world, the whole car stops. So that will be a big trouble for the entire world. I'm going to speak in these upcoming videos about the BRIC countries. Brazil, Russia, India, and China, and we'll get on, like I said, to a couple more videos here quickly. Again, if you haven't seen The Coming Storm, there's a link to watch that. It will give you the big picture of what's about to happen in our economy. I highly suggest that you watch it. Thanks, and God bless you.